VC with Parikshit Sharma, presented by Early Growth. My name is Sangeeta George. I'm an event marketing manager with Early Growth, and I'll be your host today. A few housekeeping notes before we get started. This webinar will last approximately 60 minutes, including a time for Q&A at the end. You can drop your questions in the Q&A box. The webinar will be recorded and sent to all registrants within 48 hours of the presentation. You can also find this recording and all previous recordings on our YouTube channel. Also, please do not raise your hand in between the conversation. You can drop your questions in Q&A, and Kevin and Parikshit will be happy to answer them towards the end of the webinar. So a little bit about Early Growth. At Early Growth, you've got your finance stack covered. What that means for you is really two things. First, you've got a strategic partner in growing your business. Our CFOs with the years of experience and dozens of startups under their belts helps you see what's coming, good and bad, and take advantage of it. From strategic decisions to fundraising, they've seen it all before. Second, our CFOs, senior accountants, and tax advisors take care of all the blocking and tackling related to day-to-day activities of your finances so you can focus on your business better. Both Early Growth and our CFOs have been around the block a few times. We have helped and served over 5,000 clients coast to coast and around the world. As always, our CFOs have helped our clients raise billions of dollars. We would love to help you and serve you as well. We believe in delivering peace of mind by providing you all one-on-one solutions for all your needs, requirements, including CFO services, HR, accounting, taxes, and insurance. We'd like to protect your profitability by giving you a sole point of contact to answer all kinds of questions and strategic dashboards to help understand your business and company better. We want to be a partner in growth to help your business grow by working in the back end, and you can focus on the growth side of your business. We have a promo running. You almost have started planning your taxes. You want to get a provider in place before the end of the year so you can do effective tax planning before the year ends. We have a promo running to help you with that now. Get $500 off of your 2023 tax preparation. To kick us off, I would want to do a quick poll question to see who's in the room. I'll be launching the poll right now. To tell you more about our partners and our VC, we have a moderator, Kevin Scott, with us today. Kevin joined us as the Business Development Manager in March of 2022. He attended San Jose State University, where he played ice hockey and obtained a bachelor's degree in business administration. Kevin enjoys playing hockey, playing golf, and spending quality time with his fiancée and two Great Danes. Before we proceed, just a reminder, if you have any questions for our VC, please put them in the Q&A window and not the chat. So now here to introduce our partners and to take over, Kevin Scott.
Thanks, Sangeeta. Appreciate it. And good afternoon, everyone. Thank you so much for joining us. As Sangeeta mentioned, my name is Kevin Scott. I'm the Business Development Manager at Early Growth here in our Bay Area market. Before we jump into things, really like to introduce our partners for this webinar. I think I'll start off with Sandra Valdiosera and Alan DeJana with TriNet. Alan, Sandra, welcome. Feel free to introduce yourselves.
Yeah, Kevin, thank you so much. See that you're a former ADPer. So I was at ADP Total Source for many years before coming to TriNet 4 years ago. So excited to be here. Thank you for allowing us to introduce ourselves. For those that don't know, TriNet is a PEO, professional employer organization, with a rich history of helping VC-backed companies for pretty much the last 30 plus years. And so by working with TriNet, you can focus on what's most important, which is raising capital, launching your innovative solutions, and scaling your team. We know that talent is critical to your success. And through the TriNet partnership, through the co-employment model, you can tap into our skill on benefits that not only allow you to offer top tier benefits to attract your top talent, but most importantly, to help retain them. In addition, by partnering with TriNet, you get compliance assistance so that you can focus on your, advancing your innovation while focusing on, not having to think about the administrative burdens that come with being an employer, right? The ongoing changes. And lastly, as you look to scale and grow, TriNet can help you access and maximize any R&D tax credits that you would be eligible through the PATH Act. So definitely be thinking about that. And Sandra and I are here to support you guys and answer any questions. Feel free to reach out to either one of us directly. Thank you for your time.
Thanks, Alan. We love TriNet and we appreciate you guys being a part of this. So thank you. We also have Matthew Kovac with Wilson Sonsini.
Hey, thank you, Kevin. Appreciate the introduction, and it's nice to see everyone's faces. I always get excited at events like this. I'm a lawyer from Wilson Sonsini, a corporate lawyer, and my practice is all about working with founders, getting their companies formed, and then taking them through fundraising, eventually taking them to an M&A exit or an IPO. So it's great to actually see everyone participating in a call like this. My law firm, Wilson Sonsini, is known as the Silicon Valley law firm. We grew up with Silicon Valley. We took Apple public, Google public. Our clients, our high-profile clients, are Facebook, LinkedIn, Twitter, Google, Alphabet, those. But I'm in the life sciences group, and I work with life science companies. I have medical device companies, life science companies, cultivated meat companies. I have a vegan dog food company. I work with a lot of vegan clients as well. My bread and butter is working with founders, explaining to them how to navigate the early stage of your company, how to go about fundraising, and just to be helpful in general. And I was telling Kevin the other day that my day is normally spent with my head down in documents. So I really look forward to an event like this where I get to look at your faces, look at your companies, wave hi, and get to know some actual people. So thanks again to Kevin and Escalon for putting this together. This is a really cool event.
Thanks, Matt. We like seeing your face too. Thanks for joining us. And lastly, we have Michael Orlando with Bridge Bank. Mike, welcome.
Kevin, thanks. And thanks everyone for having me. Yeah, with Bridge Bank, we're a division of Western Alliance Bank, which I assume you've all seen in the news quite a bit over the last couple of weeks. We are a division of Western Alliance. We've been a division of theirs since 2015. We originally founded in 2001, bought by Western Alliance, which bolstered our balance sheet. We're a full service bank. We do everything from treasury management to providing credit lines, MRL lines of credit, term loans, asset-based loans, what have you. We have a tech and life science team. So I know this is life sciences, and we have a full suite there and a big presence here in the Bay, also in the East as well. Do want to note that given all the news as of late, we are extremely well capitalized, and all deposits here at the bank are FDIC insured. We have my whole portfolio, along with my colleagues, all in the ICS program, where your deposits are not ever just at one bank, but at thousands of banks. So if anyone has any questions about that, please let me know. Feel free to reach out. We are definitely the banks that you want to continue to work with at your stages, given that the larger banks, may not know exactly the ins and outs of what you guys need. So please feel free to reach out if you have any questions, and just happy to be part of this. Thanks again, Kev.
Great. Thanks, Mike. And thanks again to all of our partners. We wouldn't be able to do this without you guys. To our audience, they're all, these are all great resources for you. So please feel free to reach out to them directly if any of this is top of mind. Moving along here, our goal for these webinars is to provide a platform for our VC partners to share, their insight and experiences in the industry, and ideally provide some advice and guidance to those, aspiring to get involved. So I do have a line of questions for our guests, but we'd like to make this very interactive. So please put your questions in the chat as they come up. We'll save some time at the end for a Q&A towards the end of the call. So with that, excited to introduce our guest speaker, Parikshit Sharma with IndieBio. Parikshit, welcome. Really excited to have you.
Thanks for having me and for organizing this.
Yeah, welcome again. We're excited to have you. And since this slide is up, why don't you give us a little background about yourself and your path to becoming a partner at IndieBio?
Yeah, happy to. So maybe I can start off with what IndieBio excuse me, what IndieBio is. And I've been at the firm for 6 years. IndieBio itself is 8 years old, so we're a relatively young organization. And I started my career here, and we invest in sustainable economies. IndieBio basically has 3 big pillars of investing. One is human health. So this is therapeutics, medical devices, diagnostics. The other is what we call a planetary health. So a healthy planet, may it be decarbonization, sustainability, and then the third is supply chain resilience. We've all seen the past 3 years what reliance on just one, production hub or shipping hub can do to global economies when there's a roadblock. So we want to create more resilience across the supply chain, and this is a thesis that we've shaped over the past couple of years, 4 or 5 years, and a lot of this has been possible through our learnings, working, rolling up our sleeves and working at the earliest of stages with startups. So that's what we're known for. We can start at company formation stage. Many times we will convince a postdoc or a researcher to actually start a startup. So it's even before an idea of a startup is generated, we seed it there, and we're known for our deep tech investing efforts. So unlike tech, where you can get to revenues very quickly, our specialty is high tech, deep tech stuff that will take easily 5 years to get to a product. Will need a lot of funding, capital heavy, and will create a lot of intellectual property, for example, in doing so. So that's IndieBio, and as a partner at IndieBio, I'm responsible for finding good startups to that promote this thesis we have, and supporting the founders, and we're very active investors. Once we've committed at the earliest of stages, we keep investing over the years, and that a big part of that is finding the right partner. So we syndicate a lot with later stage VCs at Series Seed A and beyond. So I a fair bit of my time is spent finding the right syndicates for our portfolio. And I am not a biologist or a biotechnologist by training. I am also not a scientist by training. I was trained as a data scientist, and that was my entry point to IndieBio. My first love, if you will, was machine learning. And biology is so rich in data. It's dynamic, it changes over time, and it has many influences. And machine learning is such a good marriage, because it thrives off of such data rich environment. So that's how I found myself interested in this space, and IndieBio hired me as, I think I was the fifth employee at IndieBio, and have been very fortunate to work with over 100 startups at this point, that we've funded in machine learning and beyond. So a lot of my investing and operating has been, down in the trenches with the startups, and hustling hard, pounding the pavement, dialing for dollars with and managing the dumpster fires as they arise with startups at the earliest of stages.
Great background. Thank you. Now, you guys are not only a fund, but also an accelerator. Can you tell the group how you identify companies to join the accelerator, and separately the decision-making process for those seed stage investments?
Totally. Yeah, the accelerator bit, is very, very important. And there's many definitions to what an accelerator is. It's uh, very rapidly evolving field. You will find a lot of university accelerators that are spinning out technologies that, intellectual property at the university. Now you have corporate accelerators that give you access to space, office space. So it can mean a lot of things. We consider ourselves to be more of a studio. It's a hybrid between a studio and an accelerator. And honestly, acceleration is one bit of it. you know early stage, you really need harmony. That's more than acceleration speeds things up. You need to bring together the science, the founding team, the financing side, the operational side, and that's what we're trying to do. And SOSV, which is our parent fund, was the only VC that gave us $2 million to build a lab at our offices. So we have a Biosafety 1, Biosafety 2 lab, and a network of other labs that we can leverage to help really technical companies de-risk. So a big part of making any decisions at the accelerator stage is seeing how can a startup utilize our infrastructure and network very well. So it's not just about the startup, it's what we bring to the table. And one thing must be true, and that's the only non-negotiable for us. It should be, the startup you're bringing to us should be an asymmetric bet. In other words, if it works, it'll be huge. It's taking on high amounts of technical risk, team risk, business risk, founder risk, intellectual property risk. We are fine with all of those, but market risk is one we do not take. We have a saying here: billions of people or billions of dollars is what we're looking at. So your technology must touch billions, and that's the scale that we're looking. Yeah, that's the lens that we start interacting around first. And in terms of criteria, it's very case by case, bespoke. And we joke, sexy tech, ugly deck is our sweet spot. So really technical, ambitious founders. Many of them are PhD candidates or postdocs. And recently we've had pharma executives or second-time founders that built a startup and now want to do, or worked as a key hire in a startup, and now want to start their own startup. We will work with folks at that stage as well. So a lot of what is risk to seed stage investors, we will take that risk. Someone needs to make that market, and we do that through our pre-seed investing. And we continue to do that because we think there is a catch-22 in the market. Investors need data points to make investment decisions, and in deep tech, startups need money to create those data points. So that's why we have this accelerated portion of investing, and our mantra there is you minimize the cost of risk rather than chances of risk. Uh, and that's what we're looking for, a team that is nimble and moves fast enough and will keep the cost of failure low in the early days.
So now you're mentioning risk, and I guess
Mhm.
beyond that risk, what challenges are these early stage biotech startups? What kind of challenges are they facing, and what is your role in helping them kind of jump over those hurdles?
Yeah, I mean, all kinds of challenges, Kevin. Uh, many of them haven't ever worked in a business, let alone start a business. They're academics by training, especially in our field. So simple stuff like we were just just redlining a document or accessing, you know, tax credits. That becomes very hard, and it's always a bit funny to see, an astrophysicist or or an evolutionary biologist struggle really hard uh figuring out a cap table. So those are real significant challenges that we work with, and that's where a lot of the partners here on the call, it's an essential ecosystem that we have to create and support these startups. And then there is, just product market fit is a big challenge in our field. In software, you can pivot. And when you pivot, you're not just pivoting the business model, but you're pivoting the entire technology very easily. In our field, you cannot pivot the technology that easily, especially if you've invested in intellectual property. So you have to find a way to build a company that's nimble while just advancing and deepening one core of the company. That's a big challenge. And honestly, uh, uh, there are some challenges that we cannot support with. Company creation, business planning, product market fit, finding investors. Uh, Incredibly hard. I do not want to undermine the effort it takes. You have to devote your life into it, uh, right? You really have to be full time, all in, to succeed in these fields. And we exist, and I spend most of my days doing that. I love doing that with our portfolio, but this is a field where you can do everything right, and still your startup may not succeed just because deep tech takes so long to get to market, and most investors have shorter time horizons of investing, right? So that's a problem. And many times fundamental research, we don't have good quality data sets, especially in healthcare, for example, where or models, animal models that predict what will happen to a disease in humans. And as a result, many investors will back out because they cannot find good endpoints. So yeah, there are bigger structural issues that we have to work on. Um, that yeah, I don't think I can I can support startups with. It's a bigger lift, and um, it's a macro lift, you know.
Yeah, a lot of structural things, a lot of things, a lot of moving parts as founders get outside of that lab, and in kind of into the operational side of things. So I guess with that said, are there things that you're looking for in founders? Any kind of like traits or marks that you look at before making an investment?
Yeah, yeah, that's a very good an important question. It's a timeless question, actually. And, a lot of investors disagree on this. Do you bet on the horse or do you bet on the jockey? That keeps some investors say we think this is a good technology, like a great technology, huge market. We'll work with the team. We'll figure it out. So uh, that I don't have a strong philosophical bent to the a horse versus jockey thing, but I think for me, the biggest thing is curiosity, and tenacity on part of our founders. A lot of our investment process is multi-stage in terms of diligence and even in terms of the money that we're spending. And throughout, we're observing stuff like the questions that our founders are asking, the rate of questions, right? And the speed at which they're building, how quickly they're turning in their thoughts and sharing their thoughts and communicating. I think those are things that we're looking for most. We think not knowing, especially not knowing the business side, is not a red flag to us, but not being willing to learn is the biggest red flag. And many scientists, I don't know why this exists in our system, think money is dirty and business is dumb, right? It's easy. Maybe it is, but it's really hard to actually do. Maybe it's easy to think about, like revenue minus cost equals profit is a very simple equation, but actually finding the right channels, navigating sales cycles, building trust with partners, whining and dining a lead to actually get a lead done is not trivial at all, right? I think if we see those biases in a founder, that's a no-go many times. So it comes down to that for us.
Okay, yeah, awesome. And you answered my next question, which I want any founders on the call to pay attention to closely, which is, any kind of pet peeves. So founders, make sure you're willing to take on the business side of things and willing to learn. Okay. Well, I guess you have companies, they go through the program, they're hitting some of their developmental milestones, they have good traction with investors. What's your criteria for follow-on investments? And how late are you guys willing to invest?
Yeah, we're multi-stage, and actually most of our investments are follow-on. So for every 200K that we do pre-seed, we can reserve up to 5 to 10 million in some cases to double down. And we co-syndicate, we co-lead at seed many times. And one of our what we look for is technical risk. So the known unknowns and the R&D profile of the company shift over, and companies start taking on more business risk. So at first we will take technical risk, and then we switch over to funding, pricing, discovery, funding channel discovery, business model discovery. And then our later stage checks are all about scale. There's a pretty standard, VC process. So once you've taken out technical risk, you have a good team, and you've demonstrated a go-to-market with at least one hero product, you quickly have to scale. So that's where we will do checks at Series A and beyond, and those are somewhat in the $5 million range. And before that, we'll do $500,000 to $1 million at seed and A. Yeah, in terms of numbers.
Great. Now, I would love to hear about the diligence process, and especially how that kind of shifts, how that criteria shifts between like those pre-seed investments and a follow-on at like a Series A or B.
Yeah, I mean, it's different for different investors, and we don't lead the seed or A. Maybe sometimes we'll co-lead the Series Seed. We take board observer positions, very active board observer positions, so we can stay on and guide the company through the process. But diligence itself, can take many different shapes and forms. Some, and honestly, it's a function of the fund that is looking to lead. There are some funds that are very technology heavy, and diligence with them will mean they will bring on an external technical expert they will bring on IP lawyers to do freedom to operate analysis. They will want to understand every moving part of your company. And then there's some that treat your technology as a black box, and they're more market and mission driven. And I think that's where diligence looks very different, in that they will want to go on sales calls with you, and will want to do site visits, and will start calling up executives at if you're an enterprise and you're selling to a big pharma company, they will start doing um, customer interviews. So the process varies, and I think that's what we train our founders towards. I think that's the more important bit: reading the room and understanding the thesis of your venture firm. In many ways, you have to become an associate at that venture firm to win diligence with that venture firm. Ultimately, what happens in most, this is Silicon Valley institutional VC firms, someone will do diligence, however long it takes. They will write a memo, and the memo basically is first floated with the general partners at a firm, and then the investment committee goes to investment committee, to decide on. And as a founder, you have to have the foresight and the curiosity again to learn what will win at the investment committee. There's many partners at a VC firm, many bringing on their own viewpoints, and so you have to be nimble enough to present a winning argument there. So it's that element of discovery that you're optimizing for in diligence.
That's great. Thank you.
Mhm.
I want to shift gears a little bit here. Can you talk to us about any exciting new tech or trends in the biotech industry that you're currently following? And then also, is there anything outside of biotech that's captured your interest?
Yeah, that's a good question. I mean, there's so many trends, but I'm in the healthcare side. I'm excited about delivery of genomic medicine. The vaccines we all got, the mRNA vaccine, is truly a testament to how, how great the promise of genomic medicine, right? It's the fastest vaccine we've ever brought to market and scaled up. It's truly amazing. And what a lot of people don't know is that the LNP, the lipid nanoparticles that house the vaccine, right? The genomic materials inside the payload, that in itself took way longer than the vaccine to design and optimize and make safe for humans. So I think this delivery is very important to our thesis. Making it specific and specific to the organ, or making it very safe, that the body does not reject it, is a very important part of IndieBio's investment philosophy. And that's where we did an investment into Dandelion Therapeutics that is using generative AI to design some of these delivery methods. So I'm excited about that side of the equation in biotech. And organoids is another one. And this goes back to what I was saying, that animal models do not predict how humans, you know, our managing director, Poe Bronson, he's always reminding us how a mouse has a voracious appetite and a very fast, you know, their metabolic rate is way superior than humans. They eat what, 25% or 50% of their body weight every day. So I don't know. We're still counting on these mice to predict what will happen to a human. So having very sophisticated organoids outside the body to give us a better understanding of how drugs will interact with our bodies is another trend we're looking for actively. So we have better models of disease. So that's on the biotech side. And beyond that, that's the beauty of our work here. What we learn in, say, stem cell research for cancer or high throughput methods for diagnostics, we almost transfer that one-to-one with cell-based meats, uh, right? Or CRISPR for ag tech. So we're doing a fair bit in ag tech these days. That's a trend I'm closely watching. So how do we build resilient agricultural systems? We talk about the pandemic, but again, this is something our managing director talks a lot about. There's been a pandemic of plants that's been underway for many years. A lot of plant disease is crushing yields, so we're looking for stuff in that space, and decarbonization and sustainability, as I said in the beginning of the call, is that if you're in deep tech, you better be investing in those fields, because yeah, we're not doing too well on meeting our targets for climate change. So IndieBio is doing a lot in upcycling CO2 and stuff like material science. So we decouple our reliance on petrochemistry. And these are all very boring, unsexy, 99% invisible fields, it's lubricants, air conditioning fluid, stuff like that, high performance, but stuff we take for granted, which is a big bolus of our climate tech problems lies in those materials. So we're looking at those systems.
Yeah, exactly. Maybe not sexy, but extremely important nonetheless.
Yeah.
Okay, well, I'm really interested in this one. How have the last 2 years plus the recent kind of turbulence in the market kind of affected the biotech industry, particularly? And I'd love to hear your outlook on the next year or so.
Oh, that's a that's a hard question. Yeah, it's been rough. I mean, we all know the last I just venture rounds are really low. I mean, Q3 in 2022, had um the capital that was invested in 2022 was as down to the levels of 2018, which was not a bumper year for biotech. The stock performance of a lot of companies have been also brutal, and we have seen a big shift in the last couple of years where venture wanted to invest in platforms 3 years ago, and so these are many shots on goal, big lots of targets in a company, to investing in assets where you have a clear line of sight to the clinic. So an indication with the same asset or a pipeline of indications with similar assets is way more appealing in biotech than a platform that will take a lot of data to train up on and generate results. So I think, yeah, I think it's been hard, but it's these times when there's corrections, especially in the early stage market. You're feeling it, where percentage of companies that are raising the very first rounds from VCs is going down, and that's been a sustained trend over the past couple of years. And Baybridge Bio is an excellent resource to track all these numbers. They put out some of the best data in this field. So I think that's a very challenging space to be in right now, right? And I think that's where that's where corrections allow for rebalancing our approaches. So if I feel it may be hard to raise a Series A right now, an institutional Series A, but for a newcomer, someone who's just incorporating their company, right? If they can find a way to be lean and bring to market something truly novel, this is a very good time to do that. Because the next 2-3 years we would have rebalanced, and hopefully there'll be an inflection that we see in the market. So I think there's a good time to start and learn from some of the tough times that we've lived through in the last 2-3 years. And I have a more positive outlook for the next couple of years. And I think some of the best founders are those that start companies in the toughest times, because they if you can raise even small amount of money with the toughest diligence in biotech, you then can survive good times much better. So we think that a lot more company creation will happen in the coming years. Yeah, so that's been a learning. And in climate tech and in synthetic biology, not not necessarily in biotech, we're seeing that rounds are still happening. Rounds continue to happen. It's just diligence takes longer. So that's also something we've discussed in this panel, right, Kevin? Like, winning diligences is important right now. And so if you don't like fundraising, this is not a good time. But if you're a good leader and you can balance how much work there is for company building and fundraising, I think this is going to be a good time for the best companies out there.
That's great.
Mhm.
Now, I'm curious, what is your, beyond that, what is your one piece of advice for founders kind of in that ideology stage, maybe a little bit beyond that, with their operational? What would be your one piece of advice, especially for a company that's looking to be involved with IndieBio?
Yeah. To be involved with IndieBio, I really think this is a great time to look 7 to 10 years ahead, right? And the last 3 years have been so consequential for all of us, right? We've seen the world change. And what I'm noticing is there is a lot of recency bias. Like, companies are still building like a sensor for COVID detection, or a lab test for COVID. Or companies are still talking about supply chain issues today. And I think there's recency bias in the pitches that we see. My advice would be to imagine the world 7 to 10 years ahead, now that we know the problems that we've seen in the last 5 years. So yeah, we must not trade off the immediate solutions that we need and that we need solved versus the long-term solutions that will be more durable. So I think that would be my advice. Like, really novel, that unprecedented technology. I think this is the time to build it. And yeah, that's also where it takes a hard skin when you see large language models for X getting funded in a week. And if you're building a cancer startup, it takes years to raise that level of funding. That's fine, so I think that having that level of self-belief and just determination is something that investors have always looked up to startups for that. So I think those are the startups that we're looking for, the ones that can teach us the most.
That's great. Well, this has been some great insight. That's all I have. We do have about 13 minutes left, so I want to open this up to the Q&A. So everybody, make sure you get your questions in there, and I'll relay those to Parikshit. So I'm going to go ahead and kind of go down the list. Anonymous would like to know if you could provide an example of what IP defensibility looks like with startups that are not high tech.
Yeah, that's an intriguing question. I mean, it is very sector dependent. Elon Musk famously built Tesla open source because he does not believe in minefields and thinks IP is a minefield. So, maybe your defensibility is in having the best process. So if you can build a mega factory as a company that brings down costs more than anyone else, and you can vertically integrate, that's an example of defensibility of IP. But if you're in sectors like therapeutics, diagnostics, defensibility in IP looks like having great intellectual IP strategy firms on your side. And we work with Wilson Sonsini a lot, and also with boutique firms that help on strategy. And that's where you need a blend of both process as well as composition of matter. IP, process IP alone won't be defensible. And I'm not an expert in this, but I think a defensibility of IP is a great lens to think about this question, because it's not just about checking a box that you have IP, it's about IP you can defend. And I guess I'm not answering the question specifically, but yeah, my advice would be get the best law firms on your side and be friends with your lawyer. They know what they're doing and they'll guide you through it.
Yeah, pretty tough question, anonymous. We have a question from Dave Alpert. Could you please specifically address the investment conditions today for AEC tech, prop tech, and AR?
Yeah, I'm not an expert in those fields, but I will tell you, prop tech is I think we will see more and more money flowing into prop tech, especially with the Investment Reduction Act. The IRA has been great tailwinds all around with the amount of tax credits you can get, and compliance with building codes and greener building codes, more sustainable building codes. That space is going to win. And from our side, on the deep tech side, we think material science. So greener concrete is already driving great investments in the space, and then electric charging and decentralized electric charging is another big opportunity area in that space. So yeah, I think prop tech I'm bullish on, and we're seeing real estate firms, big construction companies, and big, say, industrial companies like cement companies. They're opening corporate venture firms, which is a great sign. And it tells you that the market is looking for innovation.
There you go, Dave. I'm going to skip past James and go to Karena, who has a great question. How important is gender diversity to your investments? And I'm going to add to that and say, diversity investments in general as well.
Yeah, no, to get to gender diversity first, it's very important. If you look at our portfolio on our website, I think we have at least 30% of our companies have a female founder or co-founder. So we take it very, very seriously. we in our firm, our general partner, she makes sure that we're meeting a good representation for gender in our investments, and it is really important. Um, we do not set quotas, but this number I'm quoting, 30 to 40% of the portfolio representing female founders over time, just shows you how important it is. We have a dedicated female founder lunches and a network of advisors for our female founders as well, because there's, the experience as a female founder is very different. Raising money as a female founder continues, sadly, to be very different than someone who is not an underrepresented minority in our field. So yeah, we do a fair bit, yeah, through our network to support our female founders once we've made an investment. And in terms of diversity, yeah, we have founders from 36 different countries, and by that I mean not just founders who are from a country and came to the States for their education or were born in the States. Like these are founders who grew up in these 36 countries. So yeah, we invest in companies all over the world, and we help founders with immigration. We have dedicated immigration support, and also incorporation support for companies, say in Argentina, India, Singapore, and we've even done companies out of Egypt at this point. So yeah, in short, it's important, not because we have to check a box, but it's important because it makes us better investors.
That's great. I think we have time for two more. So I'm going to jump over to Howard, who's asking, are you investing in projects at their conceptual phase, or do founders present a prototype of a product to you?
Both. Conceptual is more fun, to be honest, because they're, yeah, we can be creative and brainstorm a lot more. But yeah, if you have a prototype, we invest in that too. And yeah, off late, we're doing more and more. A lot of companies that have already raised some money are coming to us for investments. So yeah, if you, totally fine if you have a product or even a prototype ready, we'll take a look.
Awesome. And last one here, James wants to know, if I want to be in the accelerator to get your mentorship, how can I do so?
Yeah, so I mean, you can go to our website and apply if you have a startup idea. For folks that want to learn more about just starting a startup in general, our YouTube channel, actually, there's a wealth of demo day pitches from our previous companies, so you can learn the kind of investments in our thesis through those. And then we do two big conferences during the year. One is a climate tech conference, which will be in October, and you can sign up for free, and there's a matching mechanism there, so you can find mentors through that. And one is a healthcare conference we do every year in April. So yeah, you can also learn about us through that method. And find me on LinkedIn, and if you have a startup, yeah, just share what you're building and we'll chat.
Well, this is great. Now there is one last question, and Jay wants to know why so generous with knowledge. I'll answer this one because it's the only question I can answer myself, and I will say it's because Mr. Sharma is a nice guy, and this is what it's all about, right? We do this on a monthly basis so that we have experienced partners with VCs like Parikshit to share their experience and their knowledge. So there you go.
That's very kind of you. Yeah, and I mean, we all should be, right? It's this is a golden age of both knowledge and learning. So that's a given. That's like low barriers to entry there for all of us.
Exactly. So there you go. Well, I will go ahead, and it looks like we're kind of out of questions here. We're also running out of time. So I'm going to go ahead and turn it over to Sangeetha to close everything out. Thanks to everybody that joined, and thanks again to our partners, especially thanks again to Parikshit for the webinar today.
Absolutely. Thanks for having me.
Thank you, Kevin, and thank you, Parikshit. That was really insightful, actually. And thanks to our partners as well for joining us in today. You can connect with Parikshit on LinkedIn, like he said, or you can reach out to Kevin and the partners in case you want to get in touch with the services. And also you can visit us at earlygrowth.com. Thank you for having us today, and have a good day. Bye-bye.
Bye, everyone. Thank you.